that that's something that is fairly predictable in terms of all of these other things. There's no way to predict, is Israel going to launch some kind of attack on Iran? Is that going to impact oil supplies? Is it not? Is Israel not going to do that?
What a mess.
There are a lot of factors here that are unknowable, whereas OPEC is much more knowable, and that may impact oil prices more strongly in the next, say 4 months.
What, in your view, could be a potential target for Israel?
So I think when you look at this area, I do think that there's a benefit for Israel in people, the United States, other countries, Iran, thinking or believing that they will or can attack Iranian oil infrastructure. I think it's highly unlikely. It's very unlikely that Israel would be able to, say, cripple Iran's oil infrastructure or oil industry with, say, one attack or two attacks. They'd really have to launch a highly coordinated attack that is very risky and would probably not be successful because they need to fly through Saudi airspace, for example. Potential target could be the Abadan refinery, which supplies a lot of Iran's gasoline needs itself. And so that could definitely have a devastating effect on Iran. I do think that there will be a lot of pressure on Israel not to do this, but like I said, I don't think that it's likely Israel would do that, but I think Israel does feel that it's beneficial for other countries to think that it might, and it may derive some strategic benefits from that in the long run. So I think the oil market is going to continue to act as though Israel, that there is a heightened risk that Israel would do this.
Hey, Ellen, just about 25 seconds here. One last story. Equinor buying a $2.5 billion stake in the Danish wind giant Ørsted. We continue to see, money being invested in renewables. Does that shift continue despite how much we spend still talking about fossil fuels? And again, just about 25 seconds.
I definitely think we're going to see more investment into renewables. I don't think that that is going to noticeably change the mix and the oil market. Oil is still going to be one of the most important energy fuels in many years to come, though I do think that certain companies could be impacted by the investments that they make in certain types of renewable industries and certain types of renewable power.
Well, great to go on all those headlines that are out there today. Ellen, thank you as always. Dr. Ellen Wall, President of Transversal Consulting, Senior Fellow at the Atlantic Council, joining us there in Florida.
Well, energy not at all unrelated to what's going on when it comes to extreme weather. Another hurricane, actually several on our radar. Milton strengthening into a catastrophic Category 5 hurricane. Rivaled, Milton, I should say, it's one of the most powerful storms produced in the Atlantic this year, rivaled only by Beryl, which raked Texas, Mexico, and the Caribbean in July. We got with us Mark Gongloff, Bloomberg opinion editor and columnist who covers climate change. He joins us from New York. Mark, we thought it was appropriate to have you join us right after talking about oil and energy production, because the intensity of storms, I think it's fair to say at this point, and scientists would agree, to some extent now tied to warmer ocean temperatures.
Absolutely. You mentioned Beryl. Earlier this year, that was the earliest Category 4 and Category 5 hurricane we've ever had. And one reason for that was because the water that it passed over on its way to the United States was at record highs. The Hurricane Helene, which we are still recovering from as we speak, just a couple of weeks ago or less, gathered strength very quickly because of hot water in the Gulf of Mexico. This new hurricane, Milton, has gone from a tropical storm to a Category 5 beast in just a little bit more than one day. And that sort of thing is basically almost unprecedented. I think there have been maybe 2 other hurricanes that have intensified that rapidly. And all of that is because it is passing over just extremely superheated water in the Gulf of Mexico, 80 degrees down to like 300 or 400 feet, I've seen by one estimate.
Well, then I think about a column and a story you put out last week, and you got into this whole idea of like, we used to kind of understand, right, who was going to be impacted the most by climate change. And these storms that are happening are not necessarily following the regular paths or the paths we assume, right? It's like now, I think that it says that the front lines of global warming are at everyone's door, right? I mean, they're moving inside. Everybody is being impacted by climate change and the severity of these storms and the unusual paths of these storms.
Yeah, I mean, I compared it to Hurricane Hugo, which happened in 1989, a good bit before the planet really started heating up. And I remember that that hurricane went through Charleston, went up and went all the way to Ohio, and still as a tropical storm. So it's not unprecedented for storms to plow their way through over land for long periods of time. The thing about Helene was it had so much energy and that spread so wide that it helped cause some rainstorms before it hit in the Appalachians. And so by the time it hit, it also was so superheated, so supercharged, so full of water, because the laws of thermodynamics tell us that hotter air holds more water. All of this stuff came together to dump even more water on the Appalachians that were already soaked with water, and caused this flooding that we haven't seen in at least 100 years there. So these things are not unprecedented, but they are behaving in ways. The rapid intensification is a thing that just doesn't usually happen that often. Not impossible before climate change, but now it's happening seemingly almost all the time. And the amount of water it's dumping is amounts we haven't seen before.
I had a conversation with someone over the weekend, Mark, who's trying to sell a property in Florida. And one of the reasons he's trying to do that is because the property floods frequently. He cannot find somebody to buy the property. I'm wondering if look, this is anecdotal, but I'm wondering if we're finally starting to see the economic effects of this play out.
Oh, yeah. I mean, that's an anecdote, but it jives with what I've heard. Daryl Fairweather, the chief economist for Redfin, told me before Helene that she was seeing in high flooding areas people trying to sell their houses. Home prices in Florida were finally starting to come down in these high-risk places, even in some parts of Miami. Partly because insurance costs were going through the roof, and also because they're just sick of being flooded. I mean, you look at what might happen with Milton now. People in say the Fort Myers area, one of the fastest growing places in the country for years before the hurricane that hit 2 years ago, which flooded that area, wiped it out. After it went through, you had bargain hunters going in to buy up land to build new houses there because it was going to be cheap. Now they've got Helene came through, drove a big storm surge into the Tampa Bay area and up into the Fort Myers area. And then you've got Milton coming along to be like the 1, 2, 3 punch. It's just happening with increasing frequency. Climate change doesn't cause more storms, but it causes them to be more destructive. And a lot of these people are starting to realize that.
Unbelievable. Yeah. All right, it is our new reality. Mark, thank you so much, as always. Mark Ongloff is Bloomberg Opinion Editor and columnist. He covers climate change. You can certainly read his stories and columns. Just head to Bloomberg.com or also check him out on the Bloomberg terminal.
Rough our lows on the major indices, the major averages. The S&P 500 down 0.9%, the Dow down 1% right now, the NASDAQ down 1.1%. Seeing big tech, Apple, Amazon, Microsoft, Meta, Tesla, all lead the index lower.
Some skittishness, no doubt about it. You know, higher yields, that's one thing. We've got earnings coming up. We've got an inflation print. There's a lot of things certainly on our minds, not to mention what's going on in the Middle East. That continues as well, of course. This is Bloomberg Business Week.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks moving lower with a sell-off in some of the world's largest tech companies, dragging stocks to session lows, extending a slide that was earlier driven by geopolitical angst and bets that the Fed will opt for a smaller rate cut next month. The Dow, the S&P, NASDAQ all very much in the red right now. Again, close to session lows. S&P down 51, down 0.9%. The Dow down 405, down 1%, while the NASDAQ Composite Index is down 195, a decline of 1.1%. 10-year 4.02%, the 2-year 3.99%. Gold down $9 the ounce. Spot gold 26.43, down 0.4%. West Texas Intermediate crude down up 3.9% right now, 77.26 for a barrel of WTI. Brent surging 3.8%, 81.05 for a barrel of WTI. Bottom line, a lot of red on the screen. As for the reasons for the selling, Stephanie Guild is head of investment strategy at Robinhood Financial.
There are a lot of things happening. The market valuations are high at 21.5 times. We do have geopolitical tensions that are rising, not falling, but you also have stimulus coming from China, which is probably going to increase demand for oil. That's why oil prices are higher. You do have a risk of a deficit going higher. And that's why I think, the 10-year can probably be elevated and is up today and is probably causing some strife in the market.
Indeed, 10-year right now at 4.02%. Stephanie Guild also mentioned crude, worth repeating. WTI up 3.9%, 77.24 a barrel. Orlando International Airport will be ceasing commercial operations Wednesday morning in advance of Hurricane Milton. Milton's winds now up to 175 miles an hour. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. JP Morgan Chairman and CEO Jamie Dimon sits down for an exclusive interview with Bloomberg's Lisa Abramowitz at the JP Morgan Techstars Conference in London. They'll be discussing global markets, tech investments, risks, and opportunities within the world of AI, the global economy, and U.S. elections.
Should be a great conversation. Be sure to check it out. Terry Williams, meantime, JB Dimon has a great view of the economy, so too does Terry Williams. She is the president and COO and an owner of One United Bank. It is the largest Black-owned bank in the country. It was founded back in 1968 during the American Civil Rights Movement. Today is largely digital, though they also have some branches, Tim, in California, Florida, and Massachusetts.
We got Terry with us from Miami. Terry, we've been talking to our Florida guests throughout the show today. We're going to get to the interview, what you're seeing, but of course, we're thinking about you and everybody who's been affected by the recent storms and who could be affected in the near future by the storms. How are you guys doing down there?
So far, so good. It's definitely cloudy, and I actually had plans to leave Miami. I'm in Miami now, but I'm going to stay because of the hurricane and be here, with the troops, as I call them. So I think we'll be fine, but it definitely, Category 4 or 5 is definitely nothing to, not be concerned about.
Yeah, sort of. It seems like people who live down there are kind of used to this stuff, but I think at the same time, the frequency and intensity, we're seeing that. Well, okay, let's talk economy, because you've got a great view of the economy as president, COO, and owner of One United Bank. We got that blowout jobs number last week. In your view, how is the economy doing?
The economy's doing great. And I hate to even say that sometimes because people look at me sort of strange, like, what are you talking about? But really, I remember when interest rates, and maybe you would know, when they were high as 20%, even 12%. Interest rates, even though they're much higher than the 3% that they used to be, still a mortgage rate of 6% is relatively low. Unemployment is, strong. Jobs numbers are strong. Inflation is coming down. This is one of these great economies that, for some reason, and, understandable after what we went through, people aren't completely feeling it yet. But I'm very optimistic about the economy.
Well, so in terms of the outcome come November, how would, you guys really tap into the underserved, the underrepresented when it comes to the financial system. It's something that Tim and we talk about a lot at Bloomberg. We obviously cover, in a week where we have earnings in the big banks, they get covered. But there are many people who are left out of the financial system, and that's really where One United and others come into the picture. So having said that, the outcome of the November election, how might that impact your business and your community?
So there are a lot of ways that it can impact our community. But first and foremost is the economy. Beyond the politics, it's really where we see interest rates going, employment going, and our hope is that regardless of who wins, that strength in the economy will continue. But we also are seeing, what I'll call a power shift. I think we're going to talk about our stream that's tomorrow. But there's definitely a power shift. And what we mean by that is that there's a greater sense, particularly in the Black community, of our strength and our resilience and our ability to sort of weather the storms, regardless of the storms. So when you look at, post-pandemic, we've seen some of the largest number of small businesses started in this country, and a lot of them in minority communities. We've seen record unemployment, low rates for the African American community. What we really need to work on is home ownership and making home ownership more affordable. And my hope is, again, regardless of the outcome of the election, that that the federal government will continue to focus on home ownership.
How do they do that in your view? Because there's this challenge when it comes to, we talked about this last week when it comes to zoning, and actually Tim Walz has talked about this too. The challenge of focusing on home ownership when the supply of homes is low, and trying to encourage home builders to build. But the national government can only do one thing. They can only do so much. Terry, what do you see as the solution here?
Well, there's definitely a need for down payment assistance, and there are local programs like here in Miami and California and in Boston, great programs for first-time home buyers. So that's the first thing, because that's where it's mainly felt, is the starter homes, the lack of starter homes. So down payment assistance is huge, and that's one area. But the second is definitely zoning. In California, they've loosened zoning so that you can build more ADUs or accessory dwelling units, which gives more housing, as well as gives individuals some income possibilities if they have space in their yard for an ADU, or even having family members. In some cases, it's grandparents or students that are living in these ADUs. But there needs to be much more flexibility on housing, and I hate to say this, but less need for parking. Parking takes a
it's like you listened. It's like you listened to our conversation last week.
It's so funny.
I love it.
It's exactly what we talked about with someone who was an expert in terms of zoning and urban planning, but that was a big thing, that the amount of parking spots. I don't know how we get around it, because we don't seem to embrace public transportation as much as we probably need to. We certainly have it here in New York.
Yeah, we spoke to Sarah
still.
Bronin, who's an architect attorney. She's a Cornell University professor. She wrote a new book. It's called Key to the City. It's on our podcast feed. I know that because I sent it to my wife earlier today.
I know. One of our producers, Elizabeth, swiped my copy.
She was gone.
She's into urban planning.
She was gone that day that we did the interview.
Yeah.
Elizabeth was.
But you're so right, Terry, in terms of that. Like, is it getting any better for communities that we talk about it so much, right? When we finally have decided that wealth creation, it's not about income, it's about wealth creation and generational wealth. And a home is often an entry point in a lot of ways to creating generational wealth. Is it getting any better for underserved communities?
It is getting better slowly.
Yeah.
And again, I'll talk about here in Miami because this is where I am at the moment. But there has been so many condos built that it's starting to become a renter's market. And that also gives the opportunity for some people to focus on home ownership because the cost of rent has been so high. So there is, and even when we were talking about parking and public transportation, there was actually one of these voter initiatives where the majority of voters said here in Miami that they wanted the government to invest in public transportation. So, I definitely think that, let me put it this way, I think the electorate, the citizens are moving in the right direction. I think it's up to us as leaders and especially our elected officials to really move with them and support what we see on the ground as being the need.
Hey, you read reference to this, but you're taking part in a pretty cool event tomorrow night. It brings together leaders in finance, politics, diversity, and it comes against the backdrop of a historic presidential election less than a month away. Kamala Harris could be the first woman of color, an Asian American, to be president. First woman also.
Yeah, I mean, there's so many boxes, right, you can check there.
How are you viewing her candidacy in the context of the national conversation around race, around politics, around representation?
Yeah. So as, owner of a bank, president of a bank, and being a Black woman, if you can't see this, if you're listening, I'm definitely used to people underestimating me and Black women. And I think that what we see now is really a better sense of our strength. We knew it, but now the world is starting to see it and recognize it. And I'll use myself as an example. There are very few owners of banks and very few Black women owners of banks. So when I walk into the room, there's sort of a sense of like, really? Is this, do you own the bank? Or, even can a bank be Black owned? And so there's a lot of questions. But when given the opportunity to share, that we're the first digital, Black digital bank, that we actually have customers all over the country and that we have a great understanding of the needs of low to moderate income communities. And you don't have to be Black to bank with us. When people start to realize that, because of where we came from middle class roots, because we have an understanding of what it's like to not have a lot of money, we are more in tune with the needs of the majority of Americans, and that using that knowledge to provide better services and better policies, I think people are starting to recognize that this is a good thing that's happening in America.
Yeah, it's absolutely. And, it'll be interesting to see what happens, certainly come November. But you're right, to have this event and just remind people of the voices that are out there. And this event, again, happening tomorrow, correct? Just quickly.
Yes, tomorrow evening at 7 o'clock Eastern time. And it's called The Power Shift. And it's about Black women in politics and economics and really in advocacy and how, we are coming into our own.
Got it.
And power is shifting in
All right.
a positive way.
Terry, thank you so much. Terry Williams, she's the president and COO of One United Bank. And this is Bloomberg Business Week. Terry, thank you.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index very much in the red. Let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are under pressure today with the Dow currently down 425 points. S&P's dropped 56 while the NASDAQ is down by 1.2%. The U.S. 10-year yield rises to 4.02%. Gold is down 10. Oil is climbing. And Bitcoin, that's higher by 1%. Among the main 11 S&P sectors, only energy was in the green. Utilities and consumer discretionary were under pressure. And leaders to the upside in the Dow, Chevron and IBM, while travelers fell 4% amid a sell-off in the insurance names. In the tech space, Supermicro rose as much as 18% on shipment data. And in other news, Generac rose 9% amid worries about the latest hurricane. Wrapping things up in the biotech space, Biogen fell 1.6% to its lowest level since 2013. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got about 18 minutes left in today's trading session, getting ready to wrap up the Monday trade. Charlie, walking through all of those numbers, we've seen some broad-based selling, and we're hovering around our lows of the session, so 1% down across the board on those major equity averages. And a big reason why is certainly, we continue to watch some of these tensions, but again, to see yields, we talked about this with our Michael McKenzie and Ira Jersey.
Yeah, on Friday, after the jobs numbers came out.
The new narrative, right,
Yeah.
when it comes to what we're seeing in rates. And you've got a 4% on the 10-year Treasury. We had 4% earlier on the 2-year. We'll get another inflation print this week, and we'll see whether or not that resets the conversation. But we see a fair amount of volatility. But right now, it's yields higher, and so we're pulling back our expectations for what the Fed does, perhaps this year, in terms of more cuts.
I want to know what Jamie Batmer has to say about it. He's Chief Investment Officer over at Creative Planning.
I thought you said Jamie Dimon, what he wants to know.
He's tomorrow.
We want to know what he has to say about it, too.
Yeah, we'll find out tomorrow.
All the Jamies.
We got Jamie Batmer with us right now. Creative Planning and its affiliates, they've got about $325 billion in assets under management. Jamie joins us from Overland Park, Kansas. Is that the story for you today, Jamie? Is it all about the yield on the 10-year?
Well, Carol and Tim, thanks for having me. Thanks for thinking of creative planning. Okay, what's the story today? This kind of market pressure we're seeing? Well, it's a byproduct of stronger than anticipated economic data. Yes, there's always the global concerns, problems in the Middle East, problems with Russia and its neighbors, but unfortunately, it's more often the norm than the exception to have problems in the Middle East and problems with Russia and its neighbors. So to the economic data on that side of what's driving things, it's a byproduct of surprising strength in the underlying markets. The jobs report that came out, stronger than anticipated. The American consumer, just stronger than anticipated. So the impact on that is, okay, there might not be as many rate reductions as initially anticipated, but that guessing with rate reductions is as useless as a lot of short-term prognostications. I mean, beginning of this year, Carol and Tim, Wall Street strategists were anticipating 7 to 8 interest rates cuts. We've only gotten 2. And so that's why trying to prognosticate in the short run is not what creative planning does. But again, this is a reaction to actually strong data that hopefully good news will revert to good news over the long run.
Right, as long as that good news doesn't include higher inflation, right?
Yeah, absolutely. Obviously, we have to measure that, but these momentary blips, it's all about the longer trend line, not kind of the week over week, month over month type data. And that trend line continues to be very, very positive. And it's just overall inflation, some things just, yes, our price is still high. Absolutely. In certain segments, suffering, absolutely. But overall, that trend line over the long run, which is what you can really help drive decision making off of instead of the short run, is still trending positive. And so, yes, as long as inflation doesn't get out of control again, it looks like we're in a good spot.
Every question Every interview, Carol, I have to ask about the election because
No, go for
we
it.
are
Yeah.
less than a month out.
Where's my app that tells me how many days?
You just less than a month is what we need to just keep in mind. Jamie, are you watching? Are clients asking you about election outcome here? Are they concerned about it? How are you looking at it?
Well, of course they're asking about it because it creates a lot of emotional angst, emotional activity. But as we know, in markets, fear and greed, just like all poor decision-making in life is what drives them, and we need to try to avoid that. But okay, let's step back on what drives all of our investment decision-making here at Creative Planning. It's the historical empirical data and academic research. So in general, the markets are up about 75% of the time, stock markets, right? 3 out of 4 years. It's not always linear like that. 75% of the time, markets go up. Actually, the data supports that in presidential election years, the stock market's up about 84% of the time. So if you just take out all the rhetoric, you'd say, okay, actually, typically speaking, markets like the election years. But then also everything that's going on, obviously it's emotional, but as I talked about, like with the Middle East, with Russia, these are unfortunate common elements of the world in which we live. I mean, Trump's assassination attempt, 15% of Americans 15% of American presidents have been shot. That's not a rounding error.
It's wild.
I mean, it's, any baby boomer or almost all baby boomers can remember the last time a sitting president refused his party's renomination with Lyndon Johnson in '68, and the market was up 15% the rest of the year from there. But the key really difference is that, yes, keep calm and carry on, well-trodden subject, but even the underlying data that sometimes people try and trade off of is very, very misleading. The facts don't agree with the rhetoric. And what I mean by that is, like, you can look up any kind of, website right now and say, okay, this sector will be good for a renewed Trump administration, or this sector will be good for Harris administration. The data just doesn't support that. And what I mean by that, just looking over the last couple administrations in 4-year periods, take clean energy as an example. Broke it out during the 8 years of Obama and the 4 years so far of Biden, and then the 4 years of Trump in between. Clean energy did dramatically better under the Trump administration than it did under either Obama or Biden. And you'd assume that to be kind of Democratic friendly sector, but not to say it's not a Republican versus Democrat thing, because the exact opposite could be said of big banks or traditional energy. You'd say, oh, okay, these are more kind of things that would do well under a Republican administration. No, the data actually says the exact opposite. They did better under Democratic administration versus Republican. And that's a key, that just the rhetoric doesn't sync up with the data. You have to keep calm and carry on, and do not make those emotional decisions based upon the heightened interest that politics brings to the table.
A lot of politics, though, looking at some of the big tech, and I just want to bring in some headlines that are crossing. Earlier today, we did do the story out about how Alphabet must lift restrictions that prevent developers from setting up rival marketplaces that compete with its Google Play Store. That was a ruling from a judge. So upending the search giant's dominance in the lucrative Android app market. This was a federal judge in San Francisco today handing a big victory to Epic Games in its long-running antitrust challenge to Alphabet's App Store. Well, meantime, just a moment ago, Google out, and it plans to appeal this Epic Games verdict and to ask the courts to pause implementing remedies. So to appeal the court injunction in the Epic Games antitrust case. I should point out, this stock's been under pressure for most of the day, but right now it's near its lows, down about 2% here. So in terms of rhetoric, big tech increasingly on regulators' radar. Jamie just got about 30 seconds. Is there a big tech thought for you here?
Well, yeah, big tech is just the hot dot of the moment, just like, big oil was 20 years ago, or big steel 20 years before that, or big railroads, 100 years ago. So there's always going to be, whatever kind of the focus of like the current engine of economic growth, there's going to be that additional regulatory scrutiny. So really, this is just part and parcel for consistency and what's kind of a healthy economic environment where some things are zigging while others are zagging. There's regulatory focus in some sectors versus others over the long run. We see that as a healthy thing, and that innovation usually outpaces regulation, and that's part of markets, always has been, always will be.
Jamie Batmer, Chief Investment Officer over at Creative Planning, joining us from Overland Park, Kansas. Taking a look at the equity industry averages. The S&P down by 1%, the NASDAQ down by 1.2%, the Dow down by a full percentage point. Coming up next with our cross-platform coverage of the close. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, in just about 7 minutes, we're going to head over to our TV colleagues. We're going to count you down to the close on this Monday, October 7th. In the meantime, this story is atop the most read on the Bloomberg terminal.
It's about billionaire Lululemon founder Chip Wilson.
What's with all this food you have here?
Oh, I brought snacks for you.
The raisins?
Yeah,
Is that for me too?
Want. Yeah.
The Ritz crackers?
Yeah, of course.
What a sweet guy.
Definitely not for my toddler.
Oh,
yeah.
It looks like toddler food.
Yeah, I know, but
or for your co-anchor.
Yeah, for my co-anchor. Yeah, I left. I came back with Ritz crackers and raisins, and I brought you a cappuccino.
Can I just say, yeah, he did bring me a cappuccino because it's really cold.
Asking you shall receive.
Can I tell you, Ritz crackers are like the perfect
They're so
cracker.
good. I know.
They're probably full of is it just butter?
It tastes like butter. Yeah, I have no idea what they are, and I don't think these little packages actually have ingredients, which is fine.
You know what? These
They're
little
just
packages,
delicious.
and they have no calories.
That's fine.
They're
yeah.
super healthy. Like, no
you
doubt
need.
about it.
It's what you need for
All right.
3 hours on air.
Can we talk Lululemon fast?
Yeah, so this is
going
really
on?
interesting. Chip Wilson, his $60 million mansion, it's become a graffiti-covered flashpoint symbolizing the polarization of a Canadian provincial election. Over the weekend, his beachfront complex in an exclusive neighborhood, Carol.
Not the beachfront complex.
It's on Vancouver's west side. It was painted with explicit messages attacking him with the graffiti still visible on Monday morning.
Yeah, a few days earlier, a sign was erected outside the house with the message, wait, I don't know if I can say any of this stuff, can I? Yeah, I think I'm just going to stay away from it. But it does reference, they're just being really critical. They're calling him somebody a communist, right? I guess this one person.
You could.
I could say it, right? Is
Yeah.
it Eby? David Eby? I don't know. Eby will tell you the conservatives are far right, but neglects saying that the NDP is communist. That's a reference to David Eby, premier of the province's 5.7 million people and his new Democratic Party.
The residents
that
of
bad.
British Columbia vote on October 19th.
Were you scared?
I was like,
We were a little scared.
I was like, what does it say, Carol?
He's like, what article are you reading, Masser? What?
The election's on October 19th that they're going to elect a new provincial government. A race that once looked like an easy victory for the left-leaning NDP has narrowed to a neck-and-neck battle with a resurgent Conservative Party.
See, and I'm just going to go to this last paragraph. Wilson's home is valued at about $60 million, making it the most valuable home in British Columbia, according to data from the
there's also some
property tax assessment body.
Graffiti on the front. It looks like a garage. There's a picture in here. It says "Selfish billionaire lives here," is what the graffiti says.
Oh, there it is. That's not so bad.
Still there.
That's an opinion, and it's defacing property, right?
A representative for Wilson didn't respond to requests for comment. He's previously written that Rand's libertarian touchstone novel Atlas Shrugged was the second most influential book on his life. I think that's in there to understand sort of where his politics are.
A net takeaway. I mean, politics makes people pretty heated and angry, right?
Yeah.
And starts to, you feel like you want to, I don't know. It just, I don't know. It gets a little crazy.
It does. We have an election coming up here.
We do, we? Yep, less than a month
Interesting
to go.
seeing Kamala Harris's media strategy shift in recent days. 60 Minutes last night. Trump was supposed to be part of that.
Isn't it tonight?
Tonight, excuse me.
Yeah, but a lot of tease. A big election episode.
Trump's supposed to be part of that.
Yep.
He did not. He backed out of that, according to the journalist.
She's
there.
doing The View. She's doing
a podcast.
What's the name of that?
Call
podcast?
Her Daddy podcast. She did that yesterday. Excuse me.
So kind of reaching out to different, but said to be almost all of it fairly friendly. I don't know about 60 Minutes. That you can say friendly,
I mean, I think
real news.
I still think the way that J.D. Vance and Trump, former President Trump, have gone out and done this media blitz and all these niche podcasts to reach people.
Certain sectors.
Yeah, it's been
and some would say
remarkable.
Yeah, and
she's really held back.
Yeah, so we'll see. At this point, I thought I heard a statistics this morning that maybe 3% are undecided, like a really small amount at this point.
Whew.
And so, if you can figure out who they are as a candidate, you certainly want to target it.
Such a small number of people.
It's small, right?
Yeah.
Compared to what it was earlier on. All right, guys, we are counting down to the close, just a few minutes away. We're going to head over to our TV colleagues. At this point, we're pretty much bouncing around near our lows of the session, but we're going to count you down, break down those final numbers, take a look at some of the decliners, the gainers. We're going to break it all down, and especially those rate moves. Right now, the closing bell starts.
Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu, taking you to the closing bell, a global simulcast. It starts right now. We're joined by Carol Master and Tim Stenovic in the radio booth. Alex Steele on assignment today as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube on a day, Carol Master, where we're only seeing about 100 stocks in the S&P 500 in the green.
Right.
Which ones are your favorites?
Yeah, well, you're going to find out in just a moment.
She doesn't play favorites.
Among stocks. I just think what's fascinating is to see, 4% again on that 10-year. We were talking to Michael McKenzie, who follows the rates markets here at Bloomberg last week, and I said to him, could we get to 4% again? He's like, yep, we could, and here we are. So it's just a new narrative, and I guess I just wonder, Tim, at this point, how long it lasts.
The first thing I did today, I actually called up my high yield savings account, which just cut my rate about a week and a half ago.
Really?
And I said, are you going to raise it back now?
And?
I think I was just talking to like an AI bot.
I got
two. So it was kind of a pointless conversation.
I got 2 emails in the last week.
What a good story.
2 emails in the last week about them cutting those high yield savings account rates.
Yeah, it's not high yield anymore.
Yeah.
No.
Still high-ish yield, right?
Well, maybe that'll show up in bank earnings, if not in Romaine's bank account, right?
Nice segue. Net interest income comment coming in there.
Yeah, well,
we like to talk about those net interest income. Oh, that's right. It's bank season. That's coming up this week, right?
Yeah, exactly.
Friday.
Have you prepared? No, of course not. I caught you off guard. Maybe Tim will wear a tie on that day. It'll be the first time in history. Carol Master, I don't know if she's working a full week or not, but if she is here, she'll be there to help cover it as well. We get the closing bells here in New York on this Monday afternoon. Not the best Monday afternoon, not necessarily the way people thought it would look, but nevertheless, they're required to clap as usual. Take a look at that. Microsoft actually ringing the bell over there. We're at the Dow Jones Industrial Average down about 400 points or 0.9%. A similar percentage drop on the S&P 500 as it closes back below 5,700. A NASDAQ composite down about 1.2% here. And your Russell 2000 also moving lower, decline of about 20 points or 0.9%.
Yeah, it wasn't just the Joker that had a bad weekend. Anybody who was trying to be... I know. It's like...
Did you watch that thing?
No, I did not. But so, a lot of people didn't go. Or they walked out. We'll get to that later. Hey, the S&P 500, as you mentioned earlier, Romaine, most names in the index lower today. 396 to the downside here as we settle in. 107, Scarlett, to the upside.
All right, taking a look at the sector performances, there's a lot of red on that screen. In fact, the only slice of green there is energy stocks, and even that group is barely higher, up by 1/3%. The worst performers here, utilities losing 2.3% on the day, communication services and consumer discretionary each down about 1.9%.
All right, guys, let's get to some of the individual gainers. I'm hoping they held, otherwise they're going to make fun of me. Pfizer, off its highs of the day, it was up about 4.5% at its highs, still finishing with a 2% gain. And of course, we know, according to a person familiar, activist investor Starboard Value has taken a stake of about $1 billion in Pfizer, specifically said to be looking for a turnaround. I mean, this is what is Pfizer going forward in terms of a post-COVID world, right? It was banking on those COVID vaccines to really keep kind of the momentum going. But this is pharmaceuticals. They're always looking for their next big thing. So we'll see what happens and whether or not some changes happen at Pfizer specifically. Supermicro having a very bullish day. This one finishing just off its highs. One of the top gainers we saw in the S&P 500 and the NASDAQ 100, about a 16% gain in today's session. The company did disclose shipment data. Bloomberg Intelligence out saying the data suggests customer demand is robust, hasn't been dented by the company's internal stumbles, such as a 10K filing delay in reported U.S. probe. They also went on to say that SMCI's figures represent a good foundation for reaching its first quarter sales guidance midpoint of $6.5 billion. So some upbeat comments by our BI team. I do want to point out Duckhorn Portfolio. This was a name courtesy of Tim. Thank you very much,
That's
Tim.
Me.
Finishing up 102% in today's session. It's about a $1.6 billion wine company soaring. It was taken private by Butterfly Equity in an all-cash deal that values it at about $1.95 billion. And just because it is election season, I did want to take you to Donald Trump's media company. DJT is the ticker, Trump Media and Technology, finishing up about 11.5%. Not quite sure why. It's been on a rally the last 3 days. Elon certainly was at a rally over the weekend, but you also have to keep in mind the stock's been under pressure after the lifting of restrictions for insiders. So maybe, I don't know, it's kind of bouncing back from some of that.
Taking a look at the stocks that were lower today, mega cap tech really dragging down the major indices here. You got Apple down by more than 2.2% today. This after an analyst over at Jefferies said investors have an overly optimistic expectation for the company's latest iPhones. Romaine, how is the new iPhone?
I have to ask my son. I mean, he loves it. I mean, you know, it's the greatest thing since sliced bread, according to him. So,
okay.
I don't know. I mean, I don't know.
Wait, is it
Tim.
your phone or his phone?
I use like 2 apps. So, you know, I'm like the worst person for all this Apple stuff anyway.
All you need is the Bloomberg app. It's the only one you need.
Oh, we have an app?
Yeah, we have a great app. Edison Lee over at Jefferies, he wrote that, quote, the high expectations for the iPhone 16 and 17 are premature because there's a lack of material new features and limited AI coverage. So there are high market expectations and they're unlikely to be met. I do want to talk about what happened with shares of Alphabet falling 2.4%. They fell after a judge ruled that the company must lift restrictions that prevent developers from setting up rival marketplaces that compete with its Google Play Store. It threatens Alphabet's dominance in the Android app market. Alphabet did come out and say just in the last hour that they will appeal the Epic Games verdict. A big victory, though, to Epic Games in its long-running antitrust challenge to Alphabet's App Store, which brought in more than $14.6 billion in sales back in 2020. Also, Amazon shares falling today. I think I looked up on the screen and saw Ken Gawreski on your air. He's the Wells Fargo Securities analyst who cut the stock to equal weight from overweight. One of the few analysts who's tracked by Bloomberg who doesn't have a buy recommendation on the stock. The downgrade cited concerns over margin trends into next year. Growth in the cloud computing business is unlikely to compensate for, according to this analyst, shares falling by 3%.
All right, let's take a quick look at yields because we did see a meaningful move higher for a 4th straight day here. And just think about where we were on a 2-year yield just less than 2 weeks ago. We were down around 3.5%. At one point today, we did trade above 4% on the 2-year yield, though it looks like we settled just below that. Still higher by 6 basis points on the 2-year. Similar moves on the 10 and the 20-year. Your 30-year yield now at 4.3.
Kind of remarkable. Also remarkable is what's going on with gold. As it continues to we see some records taken out. We see over at Costco that gold bullion is apparently, Tim, right, flying off the shelves.
Yeah, it's bringing gold buying to the masses. They offer prices that actually undercut traditional precious metals dealer, extra rewards for most loyal customers. Now there's the appeal also as a safe haven and a hedge against inflation. So kind of easy to see why gold is flying off the shelves. Do you have to buy a 6-pack of it, though?
I don't know. Probably. You probably have to buy like a 20-pack.
Yeah.
I just wanted to say I actually averted a Costco run this weekend.
How?
I went to go visit my mother, and she wanted us to take her to Costco.
You can't break that streak, right? You have to continue to not go to Costco.
I told her that absolutely not.
Meaning like you've never been to Costco and they're trying to never go?
My love is unconditional.
He just refuses to go to Costco. He's fundamentally against it. You know, the thing with these little gold bullion bars is that if you buy more than one, as several people in this story have apparently, then you got to buy a safe because where are you going to put all this gold, right? You got to sign up for safety deposit boxes, or you get a safe, which is also available at Costco. So it just kind of, you know, it's a virtuous cycle
just
here.
Melt it down, put it all around your neck, and you know, just walk around like Mr. T.
I'm there.
Yeah, OG.
Yeah.
Over gold. Hey, did you guys see Joker 2?
I don't think anyone did. I think that was the problem.
Yeah, I don't. Well, actually, about $40 million worth of people went to see it. Kind of interesting too, because this was well below what analysts had thought that this would take in at the box office. And more importantly, it appears that the people who did spend $40 million to go see this absolutely hated it. And I don't know exactly what's going on here. Yeah, that looks really good there. I mean, I normally like this guy, and I don't know, Lady Gaga, eventually she'll learn how to act.
Well,
but what is going on with...
Is it a musical? Is there singing or something that goes on in it?
Lady Gaga's in it, so there's got to be singing. But
Yeah,
I mean, isn't this the wrong demographic?
No.
Like, you know, okay, it's not a superhero movie, but like comic book movie tied in with a musical.
Our review on the Bloomberg
I mean,
by
it's like
our
pop
reporter says the movie is a punishingly dull affair. It's a pointless sequel with very little plot. It wastes the talent on screen.
Is that bad?
Yeah, that's not great.
Okay.
It's got French in the title too, Joker Folie à Deux, so that makes it hard to get on board too.
Isn't it the Post that had a story that people were just walking out of the theater?
Yeah, there was a lot. Well, I mean, the thing is, too, I mean, it kind of gets to this idea of expectations. Anytime you have these sequels, particularly with these kind of superhero-type movies, expectations usually are so high. And so it's almost, and then you have a new director coming in who's always going to put his or her spin on it. And I guess people didn't like it. But you know what?
I don't know. The Marvel guys seem to do okay for the most part.
Aren't we tired of all these franchise movies? Wasn't that the takeaway from,
Yeah.
for Disney?
I think so.
Warner Brothers Discovery needs to get the memo on that.
This is DC Comics. It's even worse.
Same
Let's
thing.
all go to Costco and buy some gold.
Franchise.
Scarlett, not the same thing.
Let's get Romaine to Costco and let's just go.
No.
Yeah,
It was a
like-
close call. I mean, I really thought I was going to have to go.
What would you have gotten if you went to Costco? Because you would have had to get
I don't
something.
know. She just wanted to stock up on stuff. I was like, that doesn't sound like something I want to do.
Lisa Mateo says there's great hot dogs.
So, I don't know.
It's like $1 something or something.
And the
took a-
raspberry
That's how they get you in
slushies,
there.
too. The berry slushies. Okay.
All right, we got to run. That's our Monday wrap, guys. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenevec. Labor, it's been front and center. 2 weeks after Boeing tried and failed to end a strike with the brash move of a direct offer to workers, the plane maker and its largest union are taking another stab to end the stalemate.
Yes, they are. This comes after Thursday's news that U.S. dock workers agreed to end a 3-day strike that had paralyzed trade on the U.S. East and Gulf Coast and threatened to become a factor in the presidential election. A lot going on.
Yeah, so couple this in with the return to office push that's coming. Hello, Amazon, last month. No question, companies are thinking a lot about employees, but the question is, are we having the right conversation? We've got with us Dr. Stefan Meyer. He follows all this closely. He's the James P. Gorman Professor of Business at Columbia Business School. He's the author of a forthcoming book, The Employee Advantage, How Putting Workers First Helps Businesses Thrive, Help Business Thrive, which comes out on October 15th. He joins us here in the Bloomberg Interactive Brokers studio. Full disclosure, Professor Meyer was my professor back in the fall of 2016.
Was Tim a good student? That's all we want to know.
We have great non-disclosure at the business school.
Just
However,
nod.
I did
Just
like...
blink your eyes twice.
No, you know
it was
what?
good.
It's the
Once for
perfect-
not so good.
It is the perfect course for journalists.
Yeah, it
because
sounds like it.
It's all case studies.
It's kind of stuff we love, right?
I didn't have to do a lot of Excel in that class, which was not my strong suit. Not coming
No
from
econometrics or
banking.
calculus.
It was actually an awesome class. Professor, good to see you. Congratulations on the book.
Thanks for having me here.
Yeah,
Good to see you again, Tim. And Tim was a great student without disclosing the grades. He was amazing.
Thank you. I appreciate that.
Great to see you again.
Good to know.
So Carol and I were talking about this ahead of the interview, and we got a good bit of time with you, so we're happy about that. She reminded me about this letter back in 2019 from the Business Roundtable, which talked about the idea of investors having to think differently about so-called stakeholders, right? Companies moving away from shareholder primacy and committing to all stakeholders, including employees. Yet here we are, 5 years later. Has anything actually shifted?
Well, I actually don't think so.
That feels like a no.
Yes, I actually don't think so. Now, to be perfectly honest, I've never met an executive who doesn't think or says that employees are the most important asset. But when you actually look at the data, you know, if you look at how often do they talk about them compared to customers, like 10 times less than customers. How engaged are people at work? Not that much, you know, like according to Gallup, there's like 67% of workers are disengaged at work. So
Is that
I don't think
normal?
they're doing a good job.
Is there always like that amount of people who are just like, it's a job?
I don't think so.
Okay.
I mean, I think that's part of the problem, kind of the mindset is like, you know, they don't want to work anyway, so I have to either incentivize them hard or control them even harder. But that's just not true. I mean, people actually like work. I mean,
No,
you know, there's a limit to it.
It's still a four-letter word.
Yeah, but people actually come to work, you know, because they, you know, it's part of their identity. If it's done well, if they're really engaged, you know, it's a fulfilling thing. I mean, I'm sure the two of you like you.
We do. Actually,
like
we
your
really,
job.
we really do. We really
You
do.
like to come to the job. You know, there's something about it. I mean, I also love my job. There is something I do and what I do. There are many, many people across the income distribution. It's also not just people who earn a lot. There is others who don't earn that much, but who are happy at work.
I like the other. Yeah, go.
Well, I was going to say, what we don't hear, though, and we're about to go into earnings season, what moves a company's stock is top line, bottom line for the current quarter, what things looked like last quarter, that outlook. One number we don't hear about is employee turnover at the company. In the beginning of your book, you talk about Amazon's focus, Jeff Bezos' relentless focus on the consumer, on the customer. But then you talk about that 2015 New York Times expose that talked about what a terrible place many people thought Amazon was to work. It didn't seem to affect the way shareholders felt about the company.
No, and I think it's a problem. I think we have to think about how the employees think. Now, in fairness, I think Amazon for the longest time also got some heat because they were customer-centric. There was always like, wow, you're spending so much money on customers.
When are you going to make
Where's
money?
the profits? Like, whatever. And back then, they said, like, look, you just wait. I mean, it's actually, if we improve the experience for our customers, eventually we can make money. We can actually increase the price. And I think the same should be true with employees. If we improve the experience for our employees, you know, productivity, cost per unit goes down because productivity goes up, turnover goes down, innovation goes up, and, you know, and the customer experience, if they actually have contact to customers, goes up as well. You know, I heard before you talked about Costco quickly. You know, people at Costco are happy.
Yeah.
The customers and the employees. And you feel it when you go in there.
And that's a company that was always like front and center in terms of healthcare and benefits. Why is it, as long as they're a publicly held company, or many companies are publicly held, is it going to be hard for an executive to kind of not think about cutting costs when it comes to employees and not worrying so much about that? Because I feel like part of our political problems or economical problems or the economy is people feeling left behind.
Yeah.
Companies that are making tons of money, we talked about this with the dock worker strike, and yet they're not feeling like they're a part of it.
Yeah. I mean, I think, you know, the hard part is if you want to cut costs in the short term, the easiest is like to cut labor.
Yeah.
In the short term, that's an easy thing to do. I mean, a little bit if you want to, you know, slash your marketing budget, that's also easy to do in the short term. But in the long term, it's just not a good idea. And I think even publicly traded company, if they can communicate to their investors that, you know, it's in the best interest, I think it's a good strategy going forward. When, you know, when Best Buy was about to be turned, I mean, when Best Buy was letting, you know, all their competitors were out of business, everybody thought like Best Buy. I mean, that's like who? And so Hubert Joly comes in, and he does a very human-centric turnover, and he got exactly that advice. He's like, cut labor, you know, cut, and he says like, no, I don't do that. What I actually want to do is understand what really happens in the store. Our blue shirts need to be happy. I need to understand what the problem is, and he did, and turned around the company in a very successful way, I think, where the shareholders were actually happy in the end.
So Best Buy and Hubert Joly is one example. What's another example of a company that has been rewarded by Wall Street for treating its workers right?
I mean, I think Costco is one that does it really well, treats their employee nicely and turns it around. I think Etsy was one that did like a turnaround. They were probably a little too employee-centric at the beginning, and meaning, you know, employee-centric is not like giving perks. I think like, you know, free yoga classes are okay, but I mean, that's not cutting it, or like ping pong tables or free snacks or whatever. And I think they figured that out and did a turnaround which cut some of those perks, but is still very, very employee-centric organization.
Well, what is it that employees want? Is it salary? Is it benefits? Is it a pretty office? What is it?
Yeah, I mean, I think it's actually less about monetary or those perks. That's not what really keeps people motivated. I mean, there's very few people who get up in the morning and is like, you know, today I'm going to increase the return on invested capital by like 0.5 percentage point. Like, I'm so jazzed. Very few do that. I mean, obviously, if you don't make enough money, you know, it's also a problem. I mean, it's like money is really, really important if you have to worry about making ends meet. But once you reach a certain level, it's not money. I mean, I talk in the book about.
Well, then, is that the employees you're talking about? That those that are already making a decent salary? Because I do feel like there's a sector of our economy that just can't make it.
That's true.
So. Hang on a second, because we've got to do a little bit of news, and I feel like we've got a lot of good stuff to unpack here. We're going to come back with Stefan Meyer. He is the James Gorman Professor of Business at Columbia Business School. He's got a new book out called The Employee Advantage, How Putting Workers First Helps Business Thrive. It sounds so logical.
Makes sense.
Right? And yet as you say, we're getting ready for earnings season, and it's not one of the things that we're going to highlight, right? Unless there's a lawsuit, then we talk about it against a company.
That's when it makes news and moves the stock price. For now, though. For now.
Exactly. We're going to come back right here on Bloomberg Business Week.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. A federal judge in San Francisco has ruled that Apple must lift restrictions that prevent developers from setting up rival marketplaces that compete with its Google Play Store. The judge handed a big victory to Epic Games in its long-running antitrust challenge to the tech giant's App Store. Technology sent stocks lower today, one of a number of factors. The Dow, the S&P, NASDAQ all ending the day in the red, with the S&P down 55, a drop today of just about 1%. The Dow was down almost 400 points, down 398, down 0.9%. NASDAQ was down 214, a decline of 1.2%. 10-year, 4.01%. The 2-year, 3.98%. Gold down 0.4%, 26.42 the ounce, while West Texas Intermediate crude rallied almost 4% today at 77.31 on WTI. Brent now above $81 a barrel, up today by about 3.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. I want to get right back to our interview with Professor Stefan Meyer. He is the James Gorman Professor of Business at Columbia Business School. He is a former Fed official. He worked at the Federal Reserve, I should say, at the Federal Reserve of Boston and also New York as well. The new book, The Employee Advantage, How Putting Workers First Helps Business Thrive. Professor, I want to talk a little bit about where the pandemic fits into all this and thinking about it in the context of how employees think differently about their work. There seemed to be a shift take place. Just look at the pushback that Amazon is getting right now to bringing workers back to 5 days a week. That's a distinct example, and you write about Amazon in the book. But how do you think about the pandemic shifting this?
Yeah, thank you, Tim. I mean, I think the pandemic shifted a lot. It put like a really bright spotlight on like what actually didn't work well before. I don't think like with the pandemic it suddenly was broken, but we figured out something is just not working well. And that spotlight really woke up a lot of people. I thought like, really, do I want to do that? Is that the right way of doing so? And remote work is just one, you know, where we thought like, we can never do, I mean, it's never possible. Turns out,
yeah, we can.
Kind of fish. And now we have to figure out like how much, but it's definitely, I mean, in my view, it's definitely 5 days a week is not. Why should that be the optimal? Maybe it is sometimes, but like I don't see why 5 days should be. And people woke up to like maybe how we did things, how bosses behaved, how the workplace was structured is maybe not the way we should do or have to do it, because the pandemic showed us we can actually do it differently. And I think it was a really, real big wake-up call that led first to, you know, great resignation and people rethinking like what are our opportunities, what are my priorities in work, and do I really want to work for a workplace that doesn't treat me as much as well as I actually think I should be treated.
Well, have we changed then? Because it does feel like a lot of people are being called back to the office, and all of these kind of new wave of thinking of maybe how we work, we thought would be with us forever. But are we seeing it kind of roll back? And is that maybe not smart, that we're not evolving and transforming?
I mean, I don't think when you look at how many percentage of work days at home, I think we're plateaued at something like 30% of the days.
Yeah.
But like obviously the news of like Amazon, you know, calling everybody back, and it's kind of ironic, obviously, almost like I talk in the example, my first example is about Amazon, and they're like that they're not as employee-centric and whatever, and now, and I thought, well, maybe they turn around because Bezos actually said we want to be the best employer as well. Turns out they're the ones who now call everybody back. I think it's a huge mistake, and it kind of shows that we haven't evolved as much, Carol, that we are, you know, they didn't listen to their employees as much as they would to their customers. They would do focus groups and like all customer insight journeys. And now they're doing something which 75% of Amazon employees hate.
Well, do you miss, because you get into the book, like you talk about purpose statements that companies need to put out. And I do wonder, we work at a company that has a very distinct culture, and we talk about it a lot. And people who come in, you feel it right from the get-go. And it was important for people to be back here. And part of it is that we running, you know, when you walk in, it's this big open area and everybody from all different departments are running into one another. And things do happen when you run into somebody. And I do wonder, does culture get lost working at home? You talk about the importance of purpose statements for employees. So I wonder, there's something to that.
Absolutely. I mean,
and you find it only at the office, right?
Absolutely. There was actually two motivators that I described that deal with or are affected when we think about remote work. One is the flexibility, autonomy, and the other one, what I call working together works. We have to be kind of together, being in a good team. Now, do we need to be together 40 hours a week?
Probably
not. Sure. Does like culture...
Love you, Tim, but
sometimes it feels like we're together 40 hours a week
or more.
But does culture matter? Yeah, but like, you know, when we were in the office, when everybody was in the office 5 days a week, like I guess like 50% of companies had like toxic work cultures.
Yeah.
You know, just because we're together doesn't make it great.
Right.
If you have a good culture, you know, and you're really intentional about it, it's probably a good thing. But again, does it need 40 hours or like, you know, there are downsides. Mentoring might not work so well. Do we do 40 hours of mentoring? I don't think so. Do we do 40 hours of like water or like kombucha tap moments? I don't think so. So we can be actually
Wait, we haven't had that yet.
We haven't had that.
You don't have a kombucha tap?
We don't have kombucha.
But we have a lot of other
cold
stuff.
brew and like a lot of other taps. I want to talk about some more sort of examples that are happening in real time. We used to talk to Brian Niccol, this new CEO of Starbucks, all the time.
Yeah,
we haven't
lot.
spoken to him since he became CEO
Not
of
yet.
Starbucks. We talked
He's
to him
a little
quarterly
busy, or so I hear.
at Chipotle. But I'm curious how you're looking at sort of that transition there, because there's a labor challenge with union and potential unionization, and then there's also the corporate challenge where he's like loves Newport Beach, and they need him in Seattle, so he's like on a private jet quite a bit.
Yeah, funny enough, I actually wrote an op-ed giving advice to him. And the advice is like doing a human-centric turnover. I mean, Starbucks, where the baristas are critically important. If you go into a Starbucks and you feel welcoming, the whole point was like that you have like the baristas and they're really happy.
I feel like we did a case study on Starbucks in your class.
That's well possible. Okay. Yeah. So like, good, you remember that. And I do think it's like really important to not fall into that myth of like, you know, cutting. We talked before about like, should you cut costs right away in this turnaround? And I don't think so. In the long term, it's better to actually listen to, you know, your workforce working with the union or not. You know, often when you actually treat your employees well, they don't unionize because they're happy to begin with. And
they're
like
good with customers.
Yeah,
right,
they actually help. You can't get happy customers without happy employees. I think there is no way. You can't walk into a Starbucks and everybody is miserable, and then be happy about paying how much a latte is nowadays, but about a ridiculous amount of money for a latte, which part of it is the coffee and part of it is the atmosphere that you're buying, and so you need like happy employees in order to create that feeling and also to make them productive.
It is amazing in a service-led economy, and we all have horror stories of being on hold. I had somebody with a particular company, telecom company, who was on hold for like 4 or 5 hours. And, you know, she's like, luckily I could be at home doing stuff and be on hold because I had to deal with an issue. But most people don't have that time. You're at work, like, you know, I mean, we have to hang up. Got to go do our show. But I do wonder, like, what's happened? Because it just seems like in a service-led economy, service has gone to the wayside. I've gone into stores and there's nobody around to help me. Or there's somebody, you know, I'm buying something and they're on their cell phone while they're checking me out or something. Or I check myself out. Like, so isn't it kind of surprising that if it's service...
Yeah, I mean, I couldn't agree more with you, Carol. I mean, I think like in a service economy, the employees has to be critically important, and you need to treat them well. And I think Costco again is a good example. There is this other for those of the listeners who are from Texas, there is HEB. It's a grocery store in Texas, where I tell that story where like they opened the store outside of Dallas, and people would line up through the night to be the first person in that grocery store.
It's wild.
It's a grocery store. And it's a very employee-centric organization. And it creates this atmosphere where people are welcomed and love it to be there. And so I think as my book says, you know, you treat your employees nice, and then the business actually thrives as a result.
I was going to say, you're a behavioral economist. And you teach students every semester at Columbia Business School. A top industry these students want to be in is consulting. Consultants often are told to cut costs. So there's this...
Move production overseas.
There's this circle that kind of needs to be disrupted, I imagine, in your view. And I'm wondering how that message is being received at the school and in your class.
I mean, I try. So, you know, it's a topic where like everybody on the one hand says like, yeah, I'm all for it. The question is whether they actually implement it. And I think it's the same with obviously customer centricity. You know, there is no executive who says I don't care about customers, but only a few can really pull it off to be really customer centric. And I think the same is true with employees. That, you know, if you really care and you really put in the work to be employee-centric, the benefits will come. But it's going to be delayed. You know, we talked about this before. It's not a short-term thing. If you want to, the easiest way to cut cost right now is to cut labor force. That's often the biggest factor in the cost structure of an
It feels kind of depressing, like the outlook, because it just sounds like you have a couple of examples, but most companies.
Yeah, I mean, I see it as actually as a very positive story. I think like there is a way, if we change the mindset of thinking it's not either or, we're fighting against the employees, and otherwise it comes out of the bottom line. It's like, no, we can actually treat them well and create more profits.
What's the research that backs that up?
I mean, there is like study over study that shows like, you know, organizations that put well-being, not wellness, well-being and treat their employees nicely, they're actually more profitable. Now, it's a hard thing to study because there's, you know, what's causal and what is actually correlational.
Right.
Because maybe the better companies can also treat them better. But I do think like there are many examples and studies who actually show that if you treat them well, the benefits will come.
But go back to like, I mean, diversity's gotten better, and I think boards, like we've seen more diversity, and we've seen the research that says companies perform better. But I do wonder, again, go to earnings, if we're not highlighting that this company's doing so well with its employees, especially for publicly held companies. I understand for smaller companies maybe why that happens, because you really, but I don't mean to be so negative, but I do wonder.
I think
got about 30 seconds left to wrap
we
up.
Probably have to shift, and maybe you guys have to shift and talking more about the employees.
Yeah.
Where,
That's
you know,
actually a really
nowadays
good
we talk
point.
a lot about customers. You know, many years ago, customers were like an afterthought. It was like product-centric and engineering and finance, and then we moved towards thinking, no, actually, the customer is really important. You know, what's retention rate on your customers, and so on and so forth. And I think we probably have to shift to also now think about employees, and maybe in the future on your show, you have to ask those executives,
No, it's a great
how
point.
do you treat your
Although
employees?
Sounds
like
great.
you say, they often say, yeah, of course employees are important.
Yeah, that's true.
Actions speak louder than words.
Stefan Meyer, he's the James Gorman Professor of
Interesting.
Business at Columbia Business School. Brand new book out next week, The Employee Advantage, How Putting Workers First Helps Business Thrive. This is Bloomberg Business Week.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with the latest on Hurricane Milton, which has exploded into the Atlantic's strongest hurricane this year, bearing down as a catastrophic Cat 5 storm on a Florida region that is still struggling to recover from Helene's devastation. The Orlando airport has been closed effective Wednesday morning. Milton's top winds now reached 175 miles an hour. That is up from 90 miles an hour at 1 a.m. Officials say that Milton now bests Hurricane Beryl, which raked Texas, Mexico, and the Caribbean in July as the most powerful Atlantic storm this season. Stocks move lower today. The Dow, the S&P, NASDAQ finishing very much in the red. S&P down 55 to 56.95, a decline today of 1%. We've got the Dow down 398, down 0.9%, while NASDAQ dropped 213, down 1.2%. 10-year yield 4.02%. 2-year, 3.99%. Gold today down $11 the ounce to $26.42. That was a drop for spot gold of 0.4%. West Texas Intermediate crude oil surged 3.8%, $77.23 for a barrel of WTI. Now, what about markets, rates, and the inflation backdrop? Jamie Batner is Chief Investment Officer at Creative Planning, and he was a guest earlier today right here on Bloomberg Business Week.
Are prices still high? Absolutely. In certain segments, suffering? Absolutely. But overall, that trend line over the long run, which is what you can really help drive decision-making off of instead of the short run, is still trending positive. And so, yes, as long as inflation doesn't get out of control again, it looks like we're in a good spot.
Jamie Batner of Creative Planning. Again, recapping stocks lower, S&P down 55, down today by 1%. The 10-year, 4.02%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Well, The Lord of the Rings, Rings of Power on Prime Video, and it's in its second season. Carol, it's expected to be renewed for a third. And from what we've read, Amazon has planned for 5 seasons.
Yeah, talk about having some, visibility.
That's pretty incredible.
And, listen.
I think it's like a Jeff Bezos passion project.
I think so, too.
Years ago, he was so excited about this.
And you get it. It's based on the work of J.R.R. Tolkien. Our next guest is
You looked up how to say that, because everybody says J.R.R. Tolkien.
Well, it's so interesting. There's actually an interview with, I think, one of the actors that was in one of the series or movies, and it's apparently a thing, and we talked about it in the newsroom, so I did do my homework. Our next guest is an executive producer, director of Rings of Power. Great to have with us Charlotte Brandstrom. She's been involved with a lot of projects that you'll likely know. She's an award-winning director, directing both TV and film, a producer who has worked on Shogun, The Continental, The Unlikely Murderer, I'm leaving a lot out, The Outsider, The Disappearance. We could go on and on and on. We're really excited to have her, and she's with us from Paris. Welcome, welcome. It is Tolkien, right?
Yes, absolutely. Thank you. Thank you for having me.
Well, thank you for being with us. There's so much we want to talk about. I got to say, though, whenever we see someone who is as accomplished as you and has gone the distance in this industry, we do kind of wonder about how you began. What was your first job? How hard was it to get going?
My first job was a job in Death Valley, actually. I was cleaning the motorhomes for the actors.
No! Oh, my God. All right, so and then what did that do? Just introduce you to people? You met people? Is that how it happened?
No, I think I worked very hard, and then I managed to convince me to work in the editing room. So I started off then in the editing and assistant editor and worked myself up. That was actually after I went to film school. I came to the States. I went to the States to go to the AFI, American Film Institute in Los Angeles. So when I graduated from there is when I got my first job cleaning motorhomes. And then I sort of worked myself up from there. So I've sort of worked in every capacity, I think, in films before I do.
And it was really easy, right? The whole process. I'm being facetious.
It was great. It was very easy. I just walked.
How hard was it? And it's something that, we actually talked on our planning call about, the number of women who are reaching the level that you are and directing and producing. And it's still not a ton, is it?
No, it's hard. I guess also because we were a bit back then. I started directing 25 years ago. And we were a bit typecast. When I would walk into a room, they saw me and they said she should do like a sentimental drama or romantic comedy. And I just wanted to do action films, and I wanted to do epics, go cinema. I wanted to do different kind of films. And because those are the films that I enjoy watching. I mean, I love Lawrence of Arabia. I loved all the big epics. I mean, I like the scale. So I just pushed for that. So whenever I got actually a little drama or comedy, I always put action in it. So little by little, it happened.
Hey, I want to talk a little bit. We have a bit of time with you, so it's great. I want to talk a little bit about being a director in a world of incredible things you can do with CGI, with AI and computers. Because if you go and watch some stuff out, like Shogun was I just wrapped it up. It was just an amazing visual, the whole thing, we loved it. Filmed in British Columbia. But how do you balance your vision with what then needs to be done in post-production to make something work?
Well, you try to basically work not only with CGI visual effects, obviously you add special effects and you build sets. So everything that you have in the foreground and that's close to camera, you try to build for real. And CGI, I'm not saying mainly, but it's used a lot for extension and embellishing everything. But then if we talk about Shogun, if we go back to the ships, that's where the biggest, that was a very big challenge. And those were just pieces of ships that I had, just small pieces on the parking lot in the rain. So, and I put the actors on it, and I would walk off from my monitor in the tent where I was sort of a little bit like avoiding the rain, and walk up to see these poor actors staying there being drenched on deck. And they had to imagine the ocean and everything else. So you try to basically talk to them and try to have them, imagine everything around them.
I will say there are some scenes where there are dives off of ships. And, it looks...
that was real.
That was real, okay.
He dived into the tank there.
Okay, yeah, that was...
That was something. We needed a little CGI that day too, actually, because when it was very cold in the air and Cosmo was diving to the water that was actually warm. So when he would get out of the water, he was like smoking. He looked like the devil. So we actually had to use CGI on the day you don't even realize, just to get rid of the smoke around him.
Wow.
When you're dealing, like you said, you like the scale, you like epic films. When you're dealing on that scale, does it require typically more takes because it's so complicated and there's so much involved? I'm just curious how complicated it is, and those poor actors that are out in the rain, are they in the rain for a long time? Because it's just difficult to put together.
Yeah, it's tough actually. What was really tough on Shogun was the scenes in the woods, the attack with the flaming arrows, because it was a night. We had a lot of weather problems on that show because of the rain. And we had to everybody was carrying around an umbrella, and the poor cameraman was trying to light the scene, but he couldn't see anything before everybody took off the umbrellas. And then when the umbrellas were gone, everybody got wet. So we had to really shoot very quickly, eventually. But, it takes a lot of preparation. It's like you have to imagine what it's going to be like. Everybody has their method. I like to work with models. So I had the ships were built like small models, and I was playing around with that and people on deck that way. And it was my best way to explain the shots to the storyboarder, and then we would storyboard the scenes. And I do the same for big battles. I sort of place them everything on the battlefield, and I decide from which direction they're coming and where the sun is. And I work everything out. And for me, it helps me to work it out that way before creating everything.
That is so cool. That is so cool. Few battles in the Lord of the Rings. So we're going to do a little bit of news, but we're going to come back and we want to talk about that, the Lord of the Rings, Rings of Power, which, as we said, in its second season on Prime Video. So we're going to continue with Charlotte Brandstrom and talk about kind of what's involved in that project and kind of where it goes, because again, the scale just makes it so unique.
Also interested in a little more on AI, and given the and you and I this is actually a perfect conversation because we're going out to Hollywood for screen time on Thursday.
Yeah, and just talk about the use of technology, just how content creation, so many different platforms where you can see it. So it's really kind of a great tee up to that. We're going to come back with Charlotte Brandstrom in just a moment. You are listening and watching Bloomberg Business Week, and this is Bloomberg Radio.
Listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, continuing here on Bloomberg Business Week, got a great guest, Charlotte Brandstrom. She's executive producer, director of Rings of Power, coming up, or it is, I should say, on Amazon Prime Video. She's still with us from Paris. Hey, before we move on to that, one more question on Shogun we were wondering, Charlotte, that we wanted to ask you. Our understanding is that the process, that there were two writers' rooms, one where English was spoken, one where Japanese. Just tell us a little bit about that dynamic, if we've got it correctly.
Yes, that's absolutely correct, except that I was around, I came in when it was already all written.
Okay.
And I just received the script where everything that was supposed to be in Japanese was in italics. And then I realized my whole script was in italics, so I got a little bit worried.
So
how did you do?
I said, are you sure we're really doing this? And they said, yes, we are shooting 3/4 of the show in Japanese.
How do you do that?
So then you are surrounding yourself with, you have to surround yourself with translators and people who know Japanese really well. And you feel like after a few days, you get used to it. You sort of think you almost speak Japanese by listening to various intonations and things.
Well, that's courtesy of one of our producers, Elizabeth, who has liked the series.
Oh, we all loved it. But
we had incredible people working on it, and I think that Hiro Sanada was one of the most incredible. He was not on camera, he was off camera with us constantly.
What can you tell us about season 2 and your role on season 2?
on Rings of Power, right? Not Shogun.
Well, and Shogun, and then we'll talk Rings
Or
of
Shogun.
Power.
Shogun, I don't know. I can't say anything at the moment.
I knew that would be the answer, but
Tim's already planning.
Yeah.
Tim's already planning.
You
All
can't
right.
say anything, but you
It would be an incredible season, I think.
and you are working on it, confirmed.
No, not right now.
Okay. We'll see.
Well, what's it like to work up whether it's Shogun or Rings of Power? You know, something that is, is going to be so watched, so critiqued big time. Do you feel that pressure as you're going through it?
You don't have time to. It's so challenging, the work itself. You have such long days and you have so many challenges every day. So you really focus on the detail of the day you sort of, it's like building a major puzzle or having pieces of a puzzle every day that you put in. So you're really focused on that. So you don't think about the outcome at that moment, I think. Or I don't, at least.
So
I'm just trying to do something that really works well.
Well, tell us about Rings of Power, certainly working well. So tell us about kind of working through that. My understanding is, too, you worked, was it both the premiere and finale for season 2?
Yeah, I did the first, the opening and the last 2 episodes, and the last 2 were the biggest. I think they were probably bigger than Shogun. They were the biggest I've ever done because there were those huge sets and a lot of different worlds and a lot of challenges. And the biggest challenge for me was to work in constant mud in episode 7.
What's that like?
Around. That was like, imagine you come in the morning at 6 o'clock in the morning and you're going to walk in sticky mud up to your knees all day. And it takes a lot of time to actually walk around in it because you can't walk very fast. And you're usually rushed all the time trying to finish the day. And you need to speak to everyone. So the walkie-talkies were very useful. So we were trying to talk to each other from a distance.
Hey, Charlotte, as I mentioned, Carol and I are headed out to Hollywood. We're going Wednesday. Bloomberg Screen Time is on Thursday. AI is going to be a huge topic there. I got a panel on that on Thursday, and I'm wondering, as a director, what's your view on the idea of AI or image likeness or displacement in the industry as a result of this technology?
I think we need to we need to protect a lot of players to help them. Because AI can't replace everything, but we need to also to be very smart about it. We're not going to stop it. So we need to use it as a tool and to help us in our work. So I'm just trying. Of course, everybody's using AI in different ways today. But, there is a danger that we need to limit, and it's specifically when it comes to, I think, for our cast, for actors, for extras, because people want to keep working in this industry. But I, as a director, also, we embrace the VFX, the progress is done, and there is a lot of, we're not going to stop it, so we have to be smart and learn how to use it. So I think I'm just trying to learn as much as I can about it and see how I can use it.
Is Rings of Power the biggest thing you feel, like you said, you like the large scale and working on these projects? Is this the biggest scale that you've worked on?
Yeah, I think so, definitely. Because it has so many different worlds. It's such huge sets, and you work with, the crews are just huge. We have a lot of people, and they are the best there are. So it's just, it's a gift every day to be able to walk to set and see these beautiful sets and figure out how to use them. But it's really about, in the end, you sit in the dark tent with your cameraman and you're looking at the screen and you're trying to make the scene work and the performance is to be believable. And so it's, in a way, it's similar to every other show too at the same time. It's just when you leave the tent and you see what you have around you that is a bit impressive.
I bet. So rom-com not in your near future, right?
Not in the near future, but it can be good too.
It's got to have the word epic in it.
I was just going to say, epic rom-com.
That's what she does.
No, listen, don't change a thing. Don't change a thing. Charlotte, thank you so much. We know it's later where you are in Paris, so thank you so much for carving out time for us. We really enjoyed this. Best of luck. And we look forward to the next seasons of whatever you're doing. Charlotte Bradstrom, she is executive producer, director, as we said, Rings of Power on Prime Video, season 2 underway. But as we said, reading in, expecting another season and maybe going on for a little while. And you'll have to wait to see what happens with Shogun, huh?
Yeah. It got a lot of acclaim.
It did.
Oh, yeah. It's like a huge award winner. Everybody was talking about it. It's on Hulu. Got to watch it.
Fun stuff, fun stuff. All right, everybody, you are listening and watching. That's going to do it for us. Wow, have a good evening. Bouts of Power starts right now.